course Americans hate this bill. It steals their Medicaid. It jacks up their premiums.
We're moving and trying to make changes.
Trump said he wanted the Senate to make the bill better. I'd like to make it much better.
I haven't slept maybe 6 hours this week because I'm on the phone all the time with members.
Great bill. It's a popular bill, but we'll get no Democrats only because they don't want to vote for Trump. They have Trump derangement syndrome at levels never seen before.
Big news for American business owners. 100% write-offs are back.
Budget Committee releasing their final, updated version of what President Trump calls his Big Beautiful Bill.
Thanks to President Trump's so-called Big Beautiful Bill,
It's a great bill. It's a massive tax cut.
several major tax benefits were restored earlier this year.
Call it a great, big, beautiful bill, because that's what it is.
Bill before the Senate is utter poison.
And in this video, you'll see 5 powerful write-offs you can still use to save thousands of dollars legally. Before we dive in, remember, this is education, not tax advice. Always talk to a qualified CPA before claiming deductions.
Consistently proven to be nothing more than a rubber stamp for Donald Trump's extreme agenda. And the American people are paying attention.
By the end of this video, you'll understand exactly which expenses qualify for full write-offs, what dates still matter for 2025, and how small timing mistakes could cost you tens of thousands in lost deductions.
220 Republicans in the House Republican Conference, and lots of different opinions. They represent very different districts around the country with very different interests. But the principle and the philosophy is always the same. Everybody's conservative. We believe in...
So let's break down what changed and how you can make the most of it. Back in 2017,
Tax cut bill.
the Tax Cuts and Jobs Act introduced 100% bonus depreciation for many types of property.
Was a modest effect on corporate investment that went up as a result of firms paying lower taxes.
That benefit started phasing out in 2023, dropping from 80 to 60%. But the new One Big Beautiful Bill Act, signed in January 2025, reversed that decline and brought the full 100% back. Here's the key detail. Property placed in service after January 19, 2025, qualifies for 100% bonus depreciation, while anything placed before that cutoff only got 40%. So if you made large purchases earlier this year and didn't hit that date, you may not have received the full benefit. Now let's look at the 5 biggest write-offs that have benefited most from these changes and what they mean for your 2025 taxes. If you use vehicles for your business, this one's big. To qualify, business use must exceed 50%, so keep a mileage log.
The power of this tax benefit is that it applies to most people, regardless of whether you claim tax deduction using itemized deduction or standard deduction.
Heavy SUVs, pickups, and vans with a gross vehicle weight rating over 6,000 pounds can claim a special Section 179 deduction, roughly $31,300 in 2025. The remaining cost can be depreciated, and with bonus depreciation, that often means a full first-year write-off. Regular passenger cars face luxury auto caps, around $20,200 first year with bonus in 2025. Example, say you bought an $85,000 SUV for 100% business use in March 2025. You could expense about $31,000 under Section 179 and bonus depreciate the rest, effectively the full amount. But if that same vehicle was placed in service before January 19th, you only got 40% bonus. It's a detail many people missed early in the year. Would you ever time your vehicle purchase just to hit a full deduction window? Equipment and machinery are next, the backbone of U.S. business deductions. CNC machines, servers, forklifts, camera gear, medical devices. Almost any tangible equipment with a recovery period of 20 years or less qualifies. If you placed it in service after January 19th, you can claim 100% bonus depreciation. Do it earlier, and it's 40%. The Section 179 limit for 2025 is about $1.25 million, phasing out after $3.13 million.
If you own a business or real estate, the new law that One Big Beautiful Bill brought back this 100% bonus depreciation and even created a brand new 100% deduction for certain production buildings.
Section 179 and bonus depreciation can work together strategically. Use Section 179 to fine-tune your taxable income, then apply bonus to the rest. Example, a small manufacturer bought $800,000 worth of machines this year. He deducted $400,000 under Section 179 and bonus depreciated the other $400,000. A complete write-off for 2025. If you could upgrade your business equipment right now, what would you buy first? Now, if you remodeled or improved the interior of a non-residential building, here's your opportunity. Lighting, HVAC, drywall, and flooring fall under what's called qualified improvement property. Under the new law, QIP placed in service after January 19th qualifies for 100% bonus depreciation. But there are limits. Building enlargements, elevators, and structural framework don't qualify. The building itself isn't eligible, only interior upgrades. That means a $200,000 office renovation could be a $200,000 deduction if completed after the cutoff date. Pro tip, keep separate invoices for structural versus interior work. Otherwise, the IRS could disallow the entire deduction. If you expanded or modernized a production line this year, this category is huge. Robotics, assembly systems, conveyors, tooling, all typically qualify for 100% bonus if placed in service after January 19th. Long production period property, like aircraft or large vessels, follows special timing rules. But the takeaway is simple.
The full purchase price of a private jet can be written off on your taxes in the year in which it was purchased. Now, prior to 2017, you had to write it off over several years. Now, the jet has to be used for qualified business activities. That doesn't mean that you can fly to Nantucket every weekend and count it as a business expense. It is for both new and pre-owned planes, so that's a big benefit. And even better, it's retroactive to January of this year. So even if you bought a plane, let's say a couple months ago, you can still write it off. If you bought a $10 million Gulfstream, for instance, you can deduct the entire $10 million.
Service date matters more than purchase date. Also, don't forget site prep. Things like wiring or concrete pads can qualify when directly connected to the machinery. Example, a brewery installed $1 million in new equipment this spring, placed in service after the cutoff. Result, a full 100% deduction in year one. Now here's a sleeper benefit, research and development. For 2022 through 2024, companies had to capitalize and amortize R&D expenses over 5 years, which hurt cash flow. Starting in 2025, Section 174A restored full expensing for domestic research and experimental costs, things like lab work, software development, and engineering design. Foreign R&D is treated differently, but for U.S. research, you can deduct it all immediately. Combine that with the R&D tax credit, and many companies are doubling their benefit. Legally, should the U.S. give bigger R&D breaks to small businesses or keep them for corporations? Tell me what you think below. Now let's talk about how to make sure you actually qualify. Keep proof of the service date. The day the asset was ready for use, not the invoice date, determines your percentage. Document business use. Mileage logs, receipts, and usage records all matter. Separate personal and business expenses. Mixed use can kill your deduction. And consult a CPA before filing. Bonus depreciation and Section 179 interact differently for every business type. Think of it like this. The law gives you the tools, but you need the right paperwork to use them legally. Let's summarize what you've learned. 100% bonus depreciation applies to property placed in service after January 19th, 2025. Anything placed before that date falls under the old 40% rule. The Section 179 limit is about $1.25 million, with a phase-out beginning at $3.13 million. Qualified improvement property applies only to interior, non-residential improvements. Manufacturing equipment and domestic R&D both qualify for full expensing this year. If this video helped you understand the new rules, tap like so YouTube shows it to more business owners. And tell me in the comments, which of these write-offs saved you the most in 2025? Thanks for watching, and don't forget, the best tax-saving strategy is knowing the rules before they change.